I wanted to explain further more on prepaids in terms of multi-currency transactions. This is more applicable to the people who are working in corporate sector, because when they are working in corporate sector in multinational companies, they must be handling the transactions in different currencies. When they are handling the transactions in different currencies, they need to understand how this prepaid account has to be booked into the books of accounts, how the amortization entries are to be booked, how am I going to clear my prepaid account once the amortization period is over. These are the things one has to understand, especially when they are working with multinational companies. So before I get into that, how to handle prepaid expenses in multi-currencies, I want you to understand what are the different currencies available in our ERP package like SAP or Oracle, to understand better about these transactions. Let us say either you go to SAP or Oracle, in general there will be three currencies available. One, document currency. Two, functional currency. This functional currency is also called as local currency. Functional currency is also called as local currency. The third one is group currency. We need to understand in detail about all these three concepts. What is document currency? Very simple. Any currency mentioned on the document is called document currency. Any currency mentioned on the document is called document currency. What do you mean by document? The document can be an invoice copy, the document can be a work order, a document can be a service order, but in general it will be an invoice copy. So any currency mentioned on your invoice copy, that is called a document currency. What is functional currency? The currency in which the entity operates their day-to-day activities is known as functional currency. I'll repeat again. Entity which operates their day-to-day activities, the currency in which the entity is operating their day-to-day activities is called functional currency. Can I say functional currency and local currency are always same? Please underline always. The answer is no. You know why? Let us go to Switzerland. If you go to Switzerland, there are two currencies acceptable in that country. One is CHF, Swiss francs, their local currency. And they also accept euro. Okay? Let us say I have my entity in Switzerland and my functional currency, I operate that entity in euro, because my day-to-day activities are happening in euro currency. So my functional currency is in euro. But the country local currency is Swiss francs, CHF. So I cannot say always my functional currency is equal to local currency. It differs. It might differ. So functional currency means the currency in which country operates or entity operates their day-to-day activities is called functional currency. Then go to group currency. What is group currency? The currency in which the consolidated P&L and balance sheets are prepared. The currency in which consolidated P&L and balance sheets are prepared is called group currency. Let me give you an example. I have my parent company in US, but I have branches in other part of Europe. So, since my parent company is in US, I wanted to consolidate my P&L and balance sheet of all my subsidiaries in USD because my parent company is in US. So my group currency, since my parent company is in US and I am consolidating my P&L and balance sheet sitting in US, I wanted to consider them in US dollar. Hence, my group currency will be considered as USD. Whereas other entities located in different parts of countries will be managing their own functional currencies. But when it comes to consolidation, it will be reported in US dollar. So, group currency means the currency in which the business consolidates their P&L and balance sheet is known as group currency. I hope you guys are clear now about all the three currencies. Once we know these three currencies, we will get into prepaid expenses now. Once the prepaid expense is paid, how that expenditure will be recorded in these three currencies, where we amortize what are the important steps we need to consider also is very important. We need to understand that. I am going to explain that with example. Let us say my document currency, I have three currencies: document currency, functional currency and group currency. These are the three currencies. My functional currency is in euro, right? My group currency is in USD. My group currency is in USD. I am not referring to document currency because since I am going to involve in multi-currencies with currency transactions, I cannot restrict myself that this should be my document currency. My document currency varies, depends on the transactions I enter with different countries. Let us say I am supposed to get services from US for next 3 months. I am currently in the month of November. I am supposed to get services for next 3 months. That means December, January, February. These 3 months services I am supposed to receive from one supplier from the US. But that supplier is demanding for advance payment in the month of November itself for the services to be provided in the month of December, January and February. Let us say he is asking me to pay 3,000 US dollars. He sent me an invoice copy saying you have to pay this amount well in advance to me, $3,000 for December, January and February. When did he send that invoice copy to me? He sent that invoice copy to me in the month of November. So November, I am supposed to make this $3,000 payment to him. Clear? Since I am paying $3,000 in the month of November for the services to be received in the month of December, January and February, this $3,000 will be considered as prepaid expenditure in the month of November. Do you agree with me? Okay. So, how do I account this? Now, the supplier sent me an invoice copy in US dollar because the supplier is in US. He sent me an invoice copy in US dollar, 3,000 US dollars. So, now what is this $3,000? $3,000 is my document currency. Why? Because the currency mentioned on the document is called as document currency. So this $3,000 is my document currency. So as soon as I get the $3,000 invoice from the supplier, I need to make that payment. While making that payment, since it is a prepaid expenditure, what entry I book? I debit prepaid $3,000 because my document currency is $3,000, and I credit my bank $3,000. Clear? While booking this entry in the system, which currency I am going to choose? I am going to choose only document currency. I will choose the document currency and I will make the payment. Once I make the payment and I enter these two, debit and credit in the system will convert this amount into the functional currency. That day's conversion rate from US dollar to euro, it will take into account and it will convert. Let us say that day the conversion rate is 0.6 for USD to euro. So how much it will be? If I take 0.6, it will be 1,800 euros. Am I right? $3,000. Since I have taken 0.6 as the conversion rate, it will be converted by the system into my functional currency as 1,800 euros. System will convert that. Then this amount should be converted again as USD because my group currency is in USD, as I said previously. What should be my USD? Since my document currency is in USD, my group currency also will be same $3,000. Are you clear up to this? My document currency is in US dollar. My functional currency is euro. My system will take the conversion from US dollar to euro by taking that day's conversion rate into account. That day conversion rate was 0.6. That is the assumption I have taken. So it converted and it took 1,800 as my conversion value for $3,000. And my group currency, since my document currency and group currency is one and the same amount would have been posted there. Now November entry is over. Do I need to book any expenses in the month of November? Not required. You know why? It was very clearly mentioned on the invoice copy that this $3,000 service will be pertaining to December, January and February. Since this service is not related to November, you need not book that as an expenditure and debit your P&L account. That is not required. So here this prepaid will go to current asset. and it will be lying in current asset account in the month of November. Now, December month has come. Since $3,000 is pertaining to 3 months, December, January and February, I need to amortize proportionate amount from prepaid expenses to expense account in the month of December. So if I take 3 months proportion for 3,000, it will come to $1,000 per month. Am I right? Right. So now what I'm supposed to do? $1,000 I need to book an amortization entry by reclassing from prepaid expenses to expense account. So my entry will be expense account debit document currency 1,000, prepaid account credit 1,000. This entry I am supposed to book in the month of December. Clear? Here the beauty. While booking this entry, which currency I will take into account? I will take document currency into the account. I have taken 1,000 document currency. What I said previously, once I take the document currency, system will automatically take the conversion rate of that particular day and convert this document currency into functional currency. Correct? Now, let us say in the month of December, the conversion rate was 0.8. Okay? If I take 0.8 into account, it will become 2,400, sorry, 800. Because 1,000 will be converted as 800 because I took 0.8 as a conversion. It will become 800. Then my group currency will be same $1,000. There is a mistake here, I will come back to you on this. What is that mistake? I wanted to explain what is that mistake and what we are supposed to take. Once I complete next month, I will tell you what is the mistake here and how do you need to rectify this. That I will explain with example. Let us say now I got into January. Same 1,000 I need to reclass again. Let us say expense debit 1,000, prepaid credit 1,000. Then again it has to be converted into my functional currency. Let us say that day conversion rate was 0.7 in the month of January. Then it will become 700. This will become 1,000. Do you agree? Now, let us go to February month, last month, third month. Same amortization entry I need to book. Expense debit, prepaid credit. Take same 1,000. Let us say that month conversion rate was 0.9. Okay? Then this will become 900. This will be 1,000. Clear? Now you see, prepaid account was debited with 3,000. Now, December month prepaid account was credited with 1,000. January month prepaid account was credited with 1,000. February month prepaid account also credited with 1,000. Debit 3,000, credit 1,000, credit 1,000, credit 1,000. So your prepaid account is tallied. There was a debit 3,000 and you credited 1,000s in 3 different months because you did the amortization. Now this is tallied. So, does it mean your prepaid account in your respective ERP, whether it is SAP or Oracle, will be zeroed out for this account? That is the answer we need to find out. Now go to functional currency. Document currency wise, absolutely no problem because 3,000 debit, 3,000 credit, no issues. Go to functional currency wise. Debit 1,800. Credit is how much? 800 plus 700. 800 plus 700, 1,500 plus 900, 2,400. So 2,400 was credited, 1,800 was debited. How system will clear? It will clear by showing 600 rupees difference. Because 1,800 is debit, credit 800, 700 and 900. Together, how much it will go to? 2,400. 2,400 minus 1,800. That means your prepaid account still will be showing 600 rupees credit balance extra. You got my point? 1,800 debit, 2,400 credit. So 600 rupees credit excess is available in your prepaid account. What will happen to this 600 excess? If you cannot clear this, it will not get zeroed out because it is having a difference here. You know why this difference has come? The difference has come because of the conversion rates. Here, at the time of payment, the conversion rate was 0.6. Whereas, when you are amortizing, each month the conversion rate is different. Because of which, you got 600 rupees difference, $600 euros difference. How do I clear this account if I take my functional currency into account? It cannot be because 600 difference will be there. The 600 you have to transfer to a gain or loss, realized gain or loss account, then only it will get cleared. But tell me, is it a realized gain or loss to transfer to P&L account? No. Why it is not realized gain or loss? Because you already paid. These are the amortization entries, bookish entries. You are just transferring them to P&L account. Settlement was already happened in the month of November itself. If at all, these are the entries because of which you are getting 600 difference. The 600 is fictitious. There is no need to transfer that amount to your P&L account as a realized gain or loss. So, what we are supposed to do to avoid these kind of differences is what we need to learn now. When we book the prepaid entry with one conversion rate in the month of November, for amortization purpose in subsequent months, you need to take the same conversion rate. When I say same conversion rate, here what is the conversion rate we have taken? 0.6. The same 0.6 which was considered in the month of November should be considered in the month of December, January and February. Why? Because the settlement was already happened, there is no need to show different conversion rates just because you are booking an amortization entry. So you need to take the same conversion rate of prepaid. The same 0.6 you need to take into account here. How do I take? System will take that day's conversion rate. How do I change it? There is an option. You can go and force the currency. You can go and force the currency in your respective ERPs. How do I force? If you allow system to convert, it will convert as 1800. But how much you are supposed to convert? You have to take only same 0.6 here, right? So this should be 600, not 800. This should be 600, not 800. But if you allow system to take, it will take 800. So it should not allow system to take 800. So you have to get into the functional currency while booking the transaction and take out the system converted value and put 600 there and then say system will accept it. That is called forcing of currency. Same way in this month, January, you allowed system to convert, because of which system considered 700 as conversion rate. But you are supposed to take same conversion rate, 0.6. If I take same 0.6, it should not be 700, it should be 600. So how do I do that? The same way, you have to go to that entry, take out the functional currency amount of 700, which was converted by the system automatically, and put 600 and save, system will accept it. That is called forcing of currency. Same way in the month of February, system, if you allow system to take, it took 900, 0.9 as the conversion, it took 900. But this is not the conversion rate you are supposed to take. You have to force the currency. 900 is not correct. Same 0.6 you have to take here. So it will become 600. Now you tell me, this has become 600, this has become 600, this has become 600. Now you see, prepaid credited 600, prepaid credited 600, prepaid credited 600. All the three 600s is equal to 1800, which was already debited here. Now, document currency wise amounts are matching, functional currency wise also amounts matching, group currency wise also amounts matching. Hence, your respective ERP will allow you to clear this prepaid account. Once you clear the open items, your prepaid account will show a zero balance. This is an important aspect we need to consider when we are handling multi-currency transactions. I hope you guys understand this concept now.